Good morning, good afternoon, and good evening. Welcome back to the It's Attainable Real Estate Investing Show. It is episode number 27. In today's show, we have a guest. Our guest today is an investor who began her real estate investing career nearly 10 years ago, shortly after the last economic downturn. And here we are again, somewhat hopefully coming out of another. She started by doing something so important. She educated herself. Not just education, though, she did all the right things. She made partnerships, made sacrifices, and really dove into it. Speaking of sacrifices, her first investment was a part of that. And though it was filled with many downs, which she'll tell us about today, and she called it an unsuccess story, there were some ups. One up is though she purchased that real estate long ago, some years back, is still paying off today. The cash flow. Yes, the cash flow we've talked about many times on the show, the income after all your expenses are paid from your real estate investment, that cash flow is paying for the home that her and her family live in today. Now she is stuck with continuing to educate herself, surrounding herself with other like-minded individuals, and has recently closed on another real estate investment. I read some about it and can't wait to hear more. Let's welcome our guest today, Nicole Dunlap Pendergrass.
Welcome to the It's Attainable Real Estate Investing Show, where you will learn about investing, the power of real estate investing, and how to invest in it. Whether you have the time or even if you don't, you're going to see it's attainable either way. And now your host, who always wants to share knowledge with you, Christopher Balkin.
How are you today?
Hey, I'm doing good. Thank you for having me here.
Yes, thanks for joining this show. I'm sure the listeners and myself are going to get a whole lot out of this session, this interview, this discussion.
I hope so.
So you started in 2010. There were a whole lot of things going on in 2010. What was it like back then, getting started as an investor, not just an investor, but a real estate investor?
I actually don't know what was happening economically or like in the world during that time. I basically just happened to go to a 3-day weekend seminar that my boyfriend, who's now my husband, bought tickets for. And he invited me, so I just went. I wasn't in the point where I was paying attention to like macroeconomics or what was going on in the industry. I had no clue really. And I just went. That was my first exposure to real estate as like a possibility for the normal person. And that's not, big hedge funds and you have to have so much money to be able to invest in real estate. And I was like, oh, wow, a regular person can invest in real estate, and there's strategies to start. Like if you don't have any money or credit or anything, like this is too good to be true. And I was searching for that thing, that way out. I already had only been in my job a couple of years, but I knew that wasn't it. And so I basically flocked to real estate. Like I saw that as the end all be all. Like that's the holy grail. That's where it's going to get me to where I need to go. And I'm just going to do it.
Awesome, awesome. So it had nothing to do with the economy or anything like that, because real
Yeah, I
estate,
still don't even know what was happening. Like, I mean, I know 2008 and then like 2000 again, I guess, yeah, that's a couple years later,
right?
but that wasn't like, yeah, I saw the movie. I don't even know if I saw it in 2010. Um, but yeah, so no, that was not in
Had
my.
nothing to do with it. Okay. So you said that you knew that that would get you where you wanted to be. That was going to be everything. What were your goals? Like where was it going to get you to?
Well, in the very beginning, my goal was to retire my mom
Okay.
because I knew she didn't have any type of retirement really. She has 5 kids. I have 4 brothers. And she basically was never one to put money into a stock market or contribute to your Roth or your 403b or whatever. Because it's like, I have 5 kids. We have one income coming in. I need money to feed all these mouths, like especially boys. Boys, they eat a lot. So but in any case, yeah, so that was the original when I first started, was just helping my mom, and for me to not have to, like, the thought of retirement and working 40 years at a job just did not sit well with me. I couldn't see myself doing, like, I didn't want to be stuck in just one place that whole time. And that's what I thought it felt like. Like I didn't know what I wanted to do, but at least if I had money coming in that took care of my bills, then I could use my free time to pursue my interest. So yeah, that's basically freedom and retiring my mom. Because
Okay.
actually the bigger part of that story is my dad had actually just passed away in 2010. And
Oh,
he left
okay.
my mom like less than a year's salary, not even that. I would say half a year's salary.
Mm,
There's not much of life insurance. And so that's basically what she had for for to put away for a little bit of retirement or some kind of rainy day something. So I just knew that wasn't really enough.
okay, awesome. So already started out with a good reason why you can't go
Mhm.
wrong taking care of those that took care of you. How many siblings did you say?
I have four.
Oh,
Four. Well,
okay.
there's nine of us. My dad has nine kids.
Okay.
I was raised with four of my brothers from my mom.
Okay. Okay. And where were you in the middle of that in terms of the youngest, the oldest, somewhere in the
I
middle?
Out of the children from that I grew up with, my mom's kids, I'm the oldest,
Okay.
and out of my dad's kids, I'm right in the middle.
Ah, okay. Okay. All right. All right. Sounds good. Now you mentioned that 3 day course. What was that like, or what did you learn there?
Woo, that it was Robert Kiyosaki, Rich Dad Poor Dad course. I
Okay.
think it might have been before I even read the book.
Okay.
But they're professionals at getting you amped up and making sure you just fired up. So it was great, just like listening to the guy at the front, and I was so motivated and so just like, oh my God, like this, people do this, like this is real, like this is anybody could do this. This is definitely possible. So it was really inspiring and just really had me amped up. So of course I ran to the back of the room and signed up for the upsell that they were doing, of course, which I technically probably didn't need to do, but I only say that got my foot in the door because I don't know how much I would have dove in if I hadn't have joined that program. So I don't look at
Okay.
anything negatively. Everything serves a purpose.
Right. So you're surrounded by a bunch of, I think I read something recently. I don't know if you wrote it or saw somebody else write it, a bunch of not naysayers, but yay-sayers.
Yes, that was me. Because
Okay.
actually, in my mastermind group, a lady named Anna, she actually said that in some other post, and I said, "Oh, I'm running with that." I said, "I love
Yeah.
that term, Anna, and yay-sayers instead of naysayers,
I
because
like that.
you really
Yes.
need to surround yourself with people who are going to really support and inspire you, and not someone to say." Oh, well, I know somebody who did that and they lost all their money. Or do you think that's a good idea? Like, it's just, and the thing is, most people are coming from a good place, especially if they're close family and friends. They're coming from a good place. They don't want
Right.
you to, they don't want to see you get hurt or to like get ruined and lose all your money and all that stuff. But they're also coming from an uninformed place because they've
Right.
never, and they don't know anybody who's known. They know somebody who knows somebody who knows somebody who did it and they lost money. So you must
Right.
lose money because I know somebody down the grapevine. You know what I mean? So it's that kind of thing. Like they're trying to protect you in the best way they know how, but that may not be the best way for you. You have to learn how to kind of shut that door, say hi, thank you for your input, and keep doing what you got to do.
Yeah, that was a struggle for me earlier on, I think, because, and I think acknowledging that people are trying to look out for you and they're doing the best they can, but it's only based on the knowledge they have, which obviously isn't firsthand typically, but it's maybe not even secondhand, but it's like you said, know someone who knows someone who knew someone who did things this way. It's like, okay, I understand
Mhm.
and, totally accept your input and know, not in a disrespectful way, but I appreciate it, but I got to keep doing what I'm, trying to do. Everybody's goals are different, and like you said, you just got to do what you got to do.
Yeah.
Now, where are you at, by the way?
Where physically?
Yes.
In New York City.
Okay. So, education wise, in terms of hearing about real estate, like I know or hear at least that, and maybe it's just a cliche, but I think it's true that New York City is a really high cost area. So, besides this 3 day course, what got you into real estate? It's not like you come across a lot of people that maybe they're landlords, but it's not like it's a super affordable place to buy property, from what I hear.
No, 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 it's not. Okay, so when I started, I really messed up my credit in college.
Okay.
Because of course, I had a kid's college mindset about, I'm not going to pay this $50 credit card bill. I need this $50. I only make $50 a month. You know, when
Hmm.
you're in college, you don't make that much. Like, I need this little bit of cash. They're a big credit card company. They can wait.
Right.
I'm getting it right now. So that was my mindset, unfortunately. And I completely trashed my credit in college. So when I started this program, I had started trying to fix some stuff. But when I started Rich Dad classes, I basically had no money saved because I was just, not fresh out of college, a couple years out of college. So I didn't have big money and I didn't have any credit. So I was going with the one strategy that they always push on you, which is wholesaling. So
Okay.
that's where I started, just like trying to hit the ground running, trying to get that to work. Even in, I think, like, because I knew New York City was like an expensive market, but I don't know, maybe I just didn't have that limitation in my mind that like wholesaling wouldn't work here. It's just bigger numbers, just
Hmm.
additional zeros. So I don't know if I was just numb to the fact of like rents and prices and numbers just in general. So larger numbers didn't really scare me or push me away as far as with wholesaling, because I'm not buying it. I'm just wrapping up the contract, and some other investor who has all the money is going to
Right.
buy
Right.
it. So there was that pressure is taken off. So I started walking around my neighborhood looking for houses that look disheveled and vacant or look unkempt, that I could, write down the addresses, try to look up who the property owner is, send direct mail. I did send like a couple of direct mail, like yellow letter campaigns, and started talking to some sellers and stuff. But I think that was just more like the practice. I was doing all the steps I was told to do. But when it came time to trying to convert that lead into an actual, like, let's sit down, I didn't think I was the best negotiator. I actually, you know, probably still need to work on that a lot, my negotiation skills. But definitely back then, I wasn't. And I just didn't know, I didn't have that guidance or mentorship at that point to kind of teach me how to negotiate and convert that possibility, like the opportunity. And then I basically said, okay, maybe this is not working on my own. Maybe if I get some friends together, we can do this together. And then that way we can split up some responsibilities. So I formed like a little investment firm. Um, Me, a friend I had met at a real estate meeting, and then two of my friends from college. So we all decided to go in, and we did that for a couple of years, like meeting every week. We had the LLC, we had the business bank account, we had, all these things you're supposed to have. We went in the middle of the night and put up bandit signs. We buy houses. We did all this stuff. And we even actually got really close on two deals. But after all that time, we actually never ended up doing a wholesale. So I think
Okay.
I probably in total kept going with trying to get a wholesale deal done for probably almost 3 years.
Okay.
and,
Okay.
and never ended up doing one. But I was just so busy doing real estate or learning real estate and going to meetups and going to seminars and 3-day weekends here and there and property tours and all this stuff, just because I was just soaking up so much information that I don't know. It just didn't seem like 3 years to me, because I always thought that next deal was right around the corner. You hear that quote was like, the people who like your success is right before most people quit. Like if they had taken
Right.
one more step, then they would have been successful. And I'm like, okay, well, I'm just gonna keep on taking one more step
Yep.
because it's about to happen.
Yep.
So I think that was like me being slightly naive on how quickly I thought these deals would happen. And that's probably also what helped me to keep going, because I had some naivety about, you know, when my big opportunity was happening and like how long this process really is. It's a long process, people. Don't think it's gonna happen overnight. I'm telling you.
Right, but it did happen, and we're going to get to those investments in a moment. But it did happen, so that's good. And I think it sounds like it helped. Like again, those yay-sayers, you had other people around you that were, after the same goals. At least somewhat, maybe not the exact same goal of retiring your mom and taking care of family, but they had something in real estate that they were after. So they were after something somewhat in common. You were going to use real estate to get there, so that
Yeah.
probably helped.
Yeah. Like that, I never had like even because my mom was very supportive from the very beginning when I started. So her and my boyfriend is the one with my husband now is one that took me to that 3-day seminar. And
Awesome.
then my friends, we were all like talking about, oh, we need to put our brains together and do something. Like we're smart, we can come up with something, we can create like a legacy. So we always knew and kind of wanted that was like an end goal kind of thing. So I never really was around people who said, "Oh, that's a dumb idea," luckily.
That's
So I
good.
know that's not everybody's story, but yeah, I didn't have a lot of people like that, or maybe I did and I just ignore them because I can do that. When I'm like so focused on one thing, I'm like, yeah, whatever. I just
Right.
move off me.
No, that's awesome. That's awesome. Now I was gonna go to partnerships. So you said you kind of split up your roles. You and some friends got together. What was that like? What was the partnership like?
It was basically, we were just all equal partners, 25% each.
Hmm.
We would put in any little money that we needed to for marketing or sending out letters or going to events that we thought would give us like a knowledge base that we needed to progress and to get better. And we would meet every weekend. One of my partners worked in a big office complex, and everybody was gone by like 5 o'clock. So by like
Okay.
6, we would all meet there after work, like every week, like every Tuesday, I think, like for a couple hours, and just meet in one of those big empty boardrooms and bring our laptops and just sit there and strategize and work it out and do what we, needed to do. And we ended up becoming pretty close friends, even with some of we were already friends, but with one of the partners, we ended up becoming really close friends, or at least I did. And let me say that that partnership experience didn't really end up the best.
Mm.
Um, so after a few years of trying to do the wholesaling, we decided, okay, maybe we need to switch our strategy a little bit. So we had went to a conference, a seminar that was about buying notes, like non-performing notes. And so we were like, oh, this sounds like something that we could get into, and maybe we can, join his mentorship group, like the guy who was doing the presentation. We could join up with him. He helps you get into like a first non-performing note, and his company kind of helps you with the repositioning it and all of that. And we saw like how profitable that could be, and you're helping somebody not lose their home and not go into, foreclosure. So we went that route, and we started getting some business credit off of like business credit cards.
Okay.
And it was under the one partner's name, her business. And then basically at the end of the day, there was I don't want to go into too much details, but at the end of the day, all the cash that we pulled off of those cards, we were supposed to use to buy the mortgage note. And then she ended up reneging and basically saying, I spoke to my accountant and my attorney, and I really shouldn't be using my business's credit cards for this venture because we didn't do the proper paperwork or whatever it is. But at the end of the day, I personally guaranteed those because I had started building up my credit by that point.
Oh.
And I personally guaranteed the business credit lines that were in her name. So, and she never ended up paying them off. And they started going to collections, and
Oh
that
wow.
started coming to me. Yeah. So,
That did start out great and end up sour. But that happens. Well, I won't say that that particular thing happens, but
but bad partnerships happen.
yeah, bad partnerships happen, bad deals happen, but it's
Yeah.
everything's a risk, including not investing is a risk too for lots of
Yeah.
reasons because, like you described, things happen. Family can be left with not enough dollars or funding to continue to take care of that family. That's a risk, but at least you went after it, trying to kind of trying to fill the gap with real estate. Now, you mentioned a couple of things there, and we'll move on. Note investing. Can you tell us about that? Underperforming
Um,
notes.
well, non-performing notes. So I never ended up doing one because
Hmm.
she pulled out. But the concept is somebody is not paying their mortgage. There's 30, 60, 90 days, however long, however late, and you can come in and buy the balance. So there's this whole complicated like spreadsheet. It's not that complicated really, but spreadsheet of like how much interest certain notes should get over the lifetime, like normally that 30-year span. And there's different ways to calculate like what a note is worth at a certain point, because if you're expecting to get so much interest, which sometimes can be like 50% or more of the principal amount, that you
Okay.
end up paying in interest over the life of the loan. So the loan that you take out is actually worth way more because of the interest guarantee that you're getting over time. And loans are normally amortized to be interest heavy on the front end. So you're
Right.
paying all your interest up front. So that's less risk for the lender and more risk for you as the homeowner, actually. Um, So yeah, then you basically you pay it, and then you start calling the owner, and you come up with some creative strategy to try to like help the owner get back on track and get the payments to be coming in regularly. So whether that's, you can, at that point you own the loan, so you can change the interest rate to make the payments lower, or you can give them like a deference for a few months so they can catch up, and then, so there's different ways to strategize to get that note to become performing. Once the note's performing for like 6 months to a year, something like that, then you can resell it back to the performing note market, and you can get all your money. You can sell it back for higher than what you bought it for. So it's basically like a arbitrage kind of situation. Or you could just hold it the whole rest of the 30 years if you want. But if you want to like go get that capital back and then redeploy it into like another note, then you would sell it on the market.
Okay, okay. We'll have to talk more about note investing specifically. It's not something I talk with the listeners about on here, so we'll have to have a discussion just on that. But no, thank you for that. So I won't dive into that. So you use the business credit for that purpose, to have enough cash. You have to buy the note, I assume, in cash.
Mm-hmm, mm-hmm.
Okay.
Yeah.
So I get it.
Leverage for note investing. So
Right.
I was switching part. But yeah, we didn't have any money, so we had to be creative and use one of these pull cash off a business credit card kind of things, and it worked. We got some good money off of there. Probably like a little more than 10,000 that we could have used to buy a note, which is more than enough to buy a note, performing or non-performing. But unfortunately, that I didn't get to go down that route. But everything happens for a reason.
Yeah, but you got the knowledge, so you can be
I
prepared
got the
for it
knowledge.
in the future.
Yeah.
Because you just shared some of it, so that's good. Okay, so now on to this first investment. I'll listen, let you tell us about that.
Okay. So what I consider my first real investment is my house hack.
Okay.
Are you talking about that or the Detroit?
Yes.
The house hack. Okay. So it was a house hack. So I had been building up my credit. Like I said, I had been saving a little bit. I still didn't have like a huge savings, but somebody in the New York City RIA who I was, friends with, she was a realtor, and she was telling me about a home ownership grant that was a $30,000 grant that from Wells Fargo. You can go and apply for it. And I said, okay, well, I don't have money saved, but I could buy a house if they're going to give me the grant. So I went and I got approved for the grant. And then after that, like I started
Awesome.
looking for, properties. So the thing is that grant had so many deadlines and restrictions and just layers of rules, regulations on it, that it really made it not that feasible to use. And it put a timeline. So I originally wanted a multifamily, but because of the timeline on the grants, I was like, there's no way I'm going to find one in time. So I started just looking for condos and co-ops and anything, right? So I did find a couple. I actually was in contract with one. It fell through with the grant because the grant, it was positioned in a way where it was 20% of the grant gets forgiven every year for 5 years because they want you to stay in the house for 5 years.
Okay.
But the problem with the bank is at the very beginning, they look at that $30,000 grant as a loan, because if you got the house and then moved out next year, you would still owe the $30,000.
Okay.
So that affected my debt to income, and I would either have to bring a lot more money to the table, which I didn't have. I was like, why would I be using this grant if I had money saved? Like, I can't do. What sense does that make? So it just made me upset. But anyway, so yeah, that fell through because of that, and I ended up that same condo board. They had another vacant condo that they had a lien on, but she said I could move in with the rent to own, like basically rent with the first right of refusal. So as soon as they cleared the lien, I would be in first place to buy that other condo.
Okay.
It was in the same development. So I moved in, I started doing that, renting there. And then at that time I was like, you know what? I don't want to wait to see when this lien is going to be removed. I don't think it's going to happen. I said, at least now I have time. So I sent out a direct mail campaign to 3 and 4 family owners in certain zip codes of the Bronx. And I basically did like it was 4th of July. So I got a bunch of, like, from Amazon, a big stack of 4th of July themed blank cards where the outside had like American flags and stuff like that. And then the inside was blank. And on the inside, I think I probably typed something for the inside, but then on the envelopes, I hand wrote the envelopes because I wanted to have a high open rate. So I hand wrote all the envelopes and mailed those out for 4th of July. And actually the 3 family that I bought came from that mailing.
Nice. So when you say, you mentioned yellow letters earlier and then you mentioned direct mail now, what is that? Explain that to the listeners a little bit.
Direct mail, basically, you guys all get it. It's spam mail, almost. It's like you're basically trying to find a certain demographic of customer that you're targeting, and then you mail to them. So there's different
Okay.
ways to get lists, and you mail them directly with whatever offer you are presenting, whether it's you want to buy their house, or whatever else. That's normally for real estate. They use it in that manner. So it's super simple concept, and there's a lot of strategies for direct mail, like to get your open rate to be higher. So basically, handwriting is one of those things, because people get inundated with so much spam mail that they just toss stuff in the trash. So that was why I picked to send mine in a card during the holiday, because I figured that would give it a much higher open rate. Because people were like, "Oh, who's sending me a card?" It was in a card envelope with American flag, stamp, and 4th of July was there. So that was, and it was handwritten on the front. So those are all strategies that I learned on how to try to get the open rate and get people to actually sit and read your letter, and then actually contact you. But yeah, so that's direct mail is basically directing your mail directly to the consumer or that you're targeting.
I like that. I like that. I'm going to use that holiday karma. I like that. I've never heard that. So yeah, thank you.
Yeah.
And I'm glad it worked out for you. Um,
Yeah.
Now, so you said this was in the Bronx.
Hmm.
And where is that where that's where you bought it, end up purchasing the property at in the Bronx?
Yeah.
Okay.
It's in the Bronx.
Okay. Awesome.
Yeah. And I bought it from actually the guy was a rehabber. Um, And so I bought it from him. And I actually, even though with all the years of studying that I had done up to that point with real estate, like I came into the situation. I remember I said I wasn't a good negotiator. So I came into the situation thinking, oh, he's asking like way above, like, so for example, I'll throw out my real numbers. I
Hmm.
got pre-approved with my Wells Fargo, that whole grant. When I went to go get a pre-approval, I was pre-approved for like 200 or 250. And so I'm like, what
Okay.
can I buy for 200? That was another reason I was looking at condos. It's like, what can I buy for 250 in New York City? Not a condo, a 1 bedroom or something
Hmm.
small. And so this guy was asking, once he called me back from the letter, and he said he was asking like 535, like $535,000. And I was just like, I'm not going to get approved for that. I
Okay.
said, there's no way. So my whole strategy, I was like, he obviously he's a rehabber. So he's real estate savvy, and he understands seller financing and some of these other like creative strategies. So I said, I'm just going to offer him his full price, as long as I did run the numbers and make sure the rents were going to cover the mortgage. Because my whole point was I wanted to live for free.
Okay.
So as long as the rents covered mortgage expenses and all that stuff, and I was living for free, that, any other percentage or returns didn't matter to me. It was just like hard numbers. And so I said, well, he understands that. Like, I'll pay his full price because the numbers worked, but he has to hold back the note for me. And then after like a year or two, then I can refinance, and I'll have already owned the property. So that was my thought going in.
Hmm.
So he's telling me, no, you are gonna get approved. Don't worry about it. Like, you just don't trust me. Trust me. I have the best mortgage broker. He's gonna get you approved. Blah blah blah. And in my head, I was like, all right, if you think so. I already knew I got a 250 approval. I'm not gonna get approved for 530.
Yeah, that's
And so I said,
double.
there's no way that this guy's gonna do it. I said, but I'll play his game. I'll go along with it. So I've said, all right, if he's gonna, get me the pre-approval, or he's gonna get me approved, then fine. So I went through the mortgage broker, and we went through all the steps, because I was like thinking, as soon as I get denied, I'm just going to go back to you again and say, okay, can you give me my seller financing now?
Right.
That was my whole thought process. I'm like, I'll play his game. So we go, and I get approved.
Wow.
So
Wow. Yeah, that's double. 250 to 535, over double. Wow.
yeah. So
Okay.
that's another like limiting belief. I feel like a lot of people out there, and I've had conversations with people, and they say, oh, I have a pre-approval for, 200 or 250 or this and that. And I say, the first thing I say is that's probably a pre-approval for a single family and
Hmm.
not for a multi-unit. Because what people don't know is that they actually take 75% of the rent from the rental units and add it to your income to help qualify you with income base for
Ah.
the mortgage. So that's how, because of the rent, I was able to qualify. Like I did have a high debt to income at that point. That's another thing I think that is great about mortgage brokers, instead of just going to one specific bank, because that one bank only has products that that bank offers, and you have to fit in that box or you're not going to get approved. A mortgage broker works with multiple banks and multiple lenders, so they'll see what box you fit in and they'll put you with the right lender that corresponds to your current financial situation.
Okay.
We were going through the closing, and one loan, our first loan, was about to get denied. He said, your debt to income is off. I feel like I want to pull this before it gets denied. That's another thing. Once you get denied from one loan, if you're applying for another one, the next bank is going to ask, have you ever been denied for a loan? And so now you have to disclose that. But if you pull the application right before you get denied, then you don't have to write that down. That's
good tip for everyone that's listening. Okay, good to know.
So then we pulled that one. He switched. He said, another bank just came out with this new product. If this is your first time ever buying a house, they will not look at your taxes. So my tax return write-offs is what was making my debt to income too high. If you just looked at my income and expenses in normal everyday life, it was fine. But my tax write-offs is what the bank was going on, and that was what was making my debt to income not clear the hurdle. So we went to someone that actually, they said, I didn't own any property before. It was my first time buying a house, and so they didn't look at my taxes, and that is how we got it through. But if I wasn't with the mortgage broker, I would have never knew that, and we would have just lost that bid, and I would just had this, denial of credit on my record that I'd have to disclose to the next time I was looking for a house. And I would have thought, oh, this just doesn't work. I can't buy a $500,000 house. But luckily, see, everything happens for a reason.
Yeah.
You never know how the chips are going to fall.
It does. But isn't it amazing how banks are just so different? Like, and I didn't know this until, just as a consumer, you have a checking account, savings account, maybe you've got some other account, but it's amazing that when you get into like investing or real estate, it's just, they all are so different from one bank to the next in terms of what their offerings are. I find that some don't lend on investment properties at all. It has to be owner occupied, so you have to live there. And then some don't lend on properties if you do live there. So it's just, it's crazy how it vastly changes from place to place, or bank to bank. Now, you mentioned house hacking. I know I've talked about this a little bit on the show, but just quickly, you talked about living for free, which is a huge premium. I know from what you said in the Northeast, it is a fact that it's expensive. So that was a huge advantage for you and your family, I'm sure.
Yeah. So, and actually at that point, when I bought, I was still single. Well, technically I was with my boyfriend, but we were engaged, fiance at that point, and we ended up actually getting married the following year.
Okay.
And then after that is when we had our first baby. So I happened to buy right before the family started getting, formulated and coming to fruition. But yeah, living for free helped with a lot of that. Like, it helped me with saving for the wedding. It helped with even afterwards, like just with our honeymoon and just with having a baby, then you can actually have some leeway, and like it didn't feel like a crunch, because you always hear babies are so expensive, you better save, oh my goodness. But we never felt that, because we were both working and we were both now living for free because he had moved in. So we had basically two whole pieces of what would have been rent now, or like we just have, we were just more relaxed, and it just makes you don't feel the stress of the day-to-day or the week-to-week, like weekly paychecks. I knew to the day, like I'll be waiting for my paycheck, like, oh, I got $50 left in my account. When is payday? Payday's tomorrow. And I talked to coworkers who didn't know that, and they're like, oh, we got paid today. And I'm like, you don't know what payday is? Why don't you know that?
Right.
But like now I've been able to get to the situation where I'm not financially free, but I'm also not looking, like sometimes I forget when payday is, because I'm not looking at the day-to-day. Like my account's not so low now that I can't survive for 3 more days. I'm not eating peanut butter and jelly for 3 days until payday comes, which I've done before. You know what I mean? So it's just it's a different feeling, and it's great. So it all started with that 3 family.
That's awesome. And like you said, it's a big savings, because like you said, you had 2 salaries coming in, And then otherwise, if it wasn't for free, usually your housing expense itself, whether it's lease or buying or mortgage, it's your largest expense typically. So that just,
Especially in New York. So I think New York, the percentage that people they like to allot to housing is like 30%.
right.
That's not 30% in New York. It's
Wow.
at least 50, if not like 60.
Wow.
Like it's crazy here. And there's people who like to be in Manhattan. I know I've had plenty of coworkers who have like a two-bedroom apartment that they have four people living in because they split the living room into two with a wall, and now everyone's two people in the living room with a wall and then the two bedrooms, and they're still paying like $1,000 each or
Wow.
1,200 each just to like have a half a living room. So it's crazy out here.
Wow. Yeah.
Yeah.
So I imagine this big slice of pie for the listeners. And then, typically in most places it's a third, except for the coastal areas, East Coast, West Coast. You take a third out, or in your case, 50 or 60% out, but you were able to put that back in just because of the investment you made. And which maybe, we'll get into this now, maybe it didn't take a lot out of your life in terms of management. Did you self manage or property manage?
I self-managed because I was
Okay.
there. So it was kind of like, why pay property management if I'm right here? And so it was more, I did need to learn how to be a landlord and just learn the ins and outs. So I'm glad that I did that. But it
Okay.
was more just like saving the money, because then now if I have to pay property manager, then I'm technically paying a property manager because all the expenses basically cover, all the income
Right.
basically cover the expenses. So if I wanted property management 10%, I'm going to have to do that. And then I'm going to have to pay for that. And why pay for that if I'm living here? So I can just handle stuff. So yeah, I didn't do that. But um the three family did have, I walked, it wasn't all like ice cream and lollipops when I first bought and closed. There was a lot of hurdles. And so people just shouldn't think that, oh, they're just going to get this house hack or however you want to get started in real estate and just everything is going to be great, because there's always trials and tribulations. Real estate is a hard industry to be in, and it's not for the thin skin. You have to get some thick skin because things happen. You just have to roll with the punches and take stuff and just go and handle it, and then on to the next thing. So there's just like a lot that happens.
So and so usually, so this was your first investment that you did, right?
That I did by myself. Yeah,
Okay.
I did do the Detroit properties with some of the people from the RIA. We kind of got together and formed like a group, and we bought properties in Detroit from the tax auction and kind of dealt with that. Like I was on the acquisitions board, so I was helping with the day-to-day responsibilities of handling that. But that was
Okay.
still, it was very different, I feel like, than the three family.
Okay. Awesome. Awesome. Now, in terms of, so you said it's not always roses. In terms of the three family, what were some? We know about the ups. What were some lessons learned, or some things you wish you could change?
Well, okay, so coming into it, there was some system things that were not quite right. Like I had to, like some of the electrical panels, these were easy fixes, but at first we didn't know what the issue was. So basically, some of the electrical panels were wired to the wrong apartments. So
Okay.
like they were getting the wrong bills. And then one of the big ones was the water meter. There was a water meter in the house, but for some reason the city didn't, or DEP is our Department of Environmental Protection, who does our water bills.
Okay.
They didn't have a record of this water meter being in the house, but you get fined for not having a water meter. So the
Oh.
seller I bought it from was fighting the fines and never got it like situated. So then that rolled over to me, because he was fighting based on physically there was a meter here. But whoever built the house, because this was actually a new build, I think it was built in like 2007. So I really feel like what happened was they built it right at the end of that, right at the top of the market, right before it crashed. And then it crashed. And the person who actually bought it, I don't think ever moved into the house. So it was vacant for like 10
Oh.
years before I bought it.
Wow.
Because even the person I bought it from, he was just rehabber. So he never lived there. So there, it was like, a lot of systems and stuff hadn't been used or fixed. So when they built the house, they never properly registered the meter. And so now that somebody owns it, like now they want to tack on all these fees. So I had to deal with that and getting a plumber out there who pulled the wrong permit, and permits in New York City cost a couple $1,000s. And you can't just take that permit and say, oh, I pulled the wrong one. Let me apply that to the new permit where I'm supposed to. No, they don't let you do that because that would be too easy. That would make too much sense. So you have to pull a whole nother permit and pay a whole nother permit fee. And so now the plumber's saying, oh, well, I didn't know. Like, you're supposed to know. That's why you're the plumber. That's why, like, I told you this information. I had already called DP 50 million times, but you weren't listening to me. So that just was like a whole, and that was like a couple months like into me owning it. So I hadn't even owned it for enough time. And then after that, one of my tenants, well, three, because there was three tenants. They're both, two of my apartments are 3-bedroom apartments. So 3 lived in the second floor and they stopped paying rent. And I had to start eviction processes on them. And it was probably like I got half the rent for half the year. And then for the other half the year, I got no rent at all. And by time the marshal actually came and physically removed the last tenant from the property. So that was... Yeah.
What's the eviction process? We don't have to dive into it in detail, but how long is it in New York? Is it tenant friendly? Is it landlord friendly?
No. Okay. New York is so tenant friendly. It's not landlord friendly at all. That's why I would never, like, I only bought that house here because I was living in it. And I'm looking for a 2-family now, but I'm also because I'm going to live in it. Otherwise, I'm not building my portfolio here. It's just the regulations and the tenant friendliness, and that is not business or landlord friendly at all. I think we officially filed because a couple months I was looking for attorneys and talking to a couple people on the phone, figuring out who would be able to do this. And then we officially filed like November 1st, and the marshals came and took her out September of the following year.
Wow. That is a long time. Jeez.
Yeah.
Wow. Okay. So yeah, and so for the listeners that are listening who aren't investors yet, like landlord versus tenant friendly doesn't mean that the law leans one side or the other. It's just in the event of a disagreement. So we have a lease agreement between the landlord and the tenant. We provide a place to stay in exchange. The tenant pays their rent. We both have two sides to uphold. So if the landlord upholds their side and the tenant doesn't uphold their side, then how long does it take to get through this process of removing the tenant with someone who will uphold their part of the agreement? So in this case, almost a year. That is a long time, 10 months. Wow. Okay. So New York is out in terms of you for investing. So I would say parting tips to investors is know where you're investing at in terms of the laws, landlord, tenant friendly, or at least the process. Is it 3 days? Is it 30 days or 90 days or 9 months?
Yes.
And then maintenance or contractors are that can be challenging too. You have to. It takes some time to find the right ones for sure.
Yeah, definitely.
Any other parting tips, and then we'll move on to the next one.
No, that's basically it. Always get an inspection on your house when you're going through, because maybe some of those issues would have been found. Actually, I don't know if they would have, because they're both weird issues. Right. But in any case, you still need to get an inspection, and make sure when you're vetting like contractors and people who are going to work on the property, make sure you just have everything in writing and you're crystal clear. Like, even if you think you're being super clear, just write it and re-explain it. It doesn't matter if you feel like you're being a nag. You need it done right the first time.
Right. Okay. All right. Writing that down for myself too, and I know it's going to help the listeners a lot. Okay, so along the way, you talked about it some. You had some obstacles. You had some great obstacles, some good ones. Your family grew. So how has that gone? Do you think you're or actually I should ask, not you, but how do they think you're managing business, investment life versus family life?
Well, I mean, my husband, he'll say like I'm always on the phone, or I always got a meetup or Zoom nowadays. Like, it's like, every day I got at least one, if not a couple. Okay. And he goes with the flow. Like, literally, we had only been dating for probably like a year or two. before he took me to that 3-day seminar. And
Okay.
then from that time to now, so that was 2008 or 2010 that I did that. Was this 2021? So like 10, 11 years, this has just been my life. I've just been doing real estate and going to every kind of real estate event and meetup the entire time he's known me, before we got engaged, before we got married. So there's nothing he can say now. Like, he's the one that opened the door for me to start doing this, and I've been doing it since then. So like, he just was like, this was just the start of our relationship, was just me being into real estate. My kids, they are too young to care. They just
Okay.
want me when they want me. There's 3 and 1.
Okay. I was
So
going to ask how old they are. Okay.
yeah, so they don't care about
Okay.
anything that I'm trying to do. They just, whatever they need in the moment, that's it.
So they're too young to understand or know, but so he knows that real estate is it's like you mentioned earlier, it's not a quick thing. It takes time, but it takes a while to actually start to see the fruits of your labor. Like you said, you were trying to wholesale for 3 years went by before you knew it, and you hadn't closed a wholesale deal, but now you've got some investments you've done, and some that are paying off. Obviously right now, like we talked through, but he understands it takes a while to see the long term goals.
Yeah, he definitely does. And he actually, because he's been learning a lot about real estate just vicariously through like what I've been doing, and like me
Awesome.
explaining certain things to him, and just as it comes along. So he actually is seeing now where things are starting to really ramp up, and
Okay.
really start to come to fruition. So he's seeing it kind of like unfold in front of his eyes. So it definitely feels like, not, it doesn't feel as long as it's been, honestly. But yeah, but he's definitely very supportive, and just got to keep those lines of communication open, and that's it. That's any relationship.
Right. Awesome. Awesome. So you got engaged, you got married, you have 2 kids, 3 and 1. What happened next? So I think I saw more education, mastermind group. What happened? What happened after you took a break, obviously, and then what happened after that?
So after the break, that was after the first marriage and first kid, and then I'm trying to just keep the timeline. We were pregnant with the second kid,
Hmm.
and then that was 2019 when I kind of was like, all right, enough break. I need to get back into the business of things. Like, I hadn't been going to like real estate meetups, or being really involved in like trying to expand my investment or expand my portfolio. Kind of, I was just dealing with fires in the 3 family.
Hmm.
But I was like, all right, everything's, it's getting calm. Like, things are situated. The baby's old enough for me to like be able to know her how she flows day to day and stuff like that. So I was like, okay, now I can actually, get back into the swing of things. And so I just started like researching. I think that the main thing I was researching at that point was, I was really obsessed, and actually probably still, like, I really just want to know, what strategies are wealthy people putting their money into to like grow and protect and just get that generational wealth. Like, what are the vehicles that the wealthy people are using? Like, I don't need to be wealthy right now, but I at least want to start with those same vehicles so it can
Hmm.
grow as I'm growing in it. And I don't want to look at the same old in the box kind of metrics, like your 401k or your just anything like stocks and bonds, and that's all that you people really know as far as like investing. But I'm like, rich people are doing something different. They're doing stuff that's not like in the common eye. I know that there's alternative strategies out there, but it's kind of feel like it was like something that's so held so close to the chest. It's like,
Hmm.
if you're not in that circle, you're not going to find out about those strategies. Or if you can't afford to have like the financial advisor that advises the wealthy clients, if you can't afford their services, then how are you going to find out about it? So that's basically where I found out about like a certain refinancing strategy to help you pay off your house faster and have like interest only payments. So I refinanced my house that way, and it actually had appraised a lot higher because there was a lot of appreciation in the Bronx during those few
Hmm.
years. So I got to take, even at 80% LTV, I got to cash out like a good chunk. And I was able to use that at that point, I said, okay, now I have some a little bit of capital, I want to put this into different buckets. I want to be smart about it. I don't want to just put all of it into one. So it wasn't like enough that it was some huge amount, but to me, it was, more than what I had at one time before. So I said, let me be smart about this. So I actually put some money into a passive syndication as a
Okay.
LP, a limited partner. And then that's when I knew I wanted to do multifamily on a bigger scale. So I needed to join a coaching program. So I researched a few different coaching programs. I had a few different calls with the people who run the programs. And I ended up going with Jake and Gino, who wrote the book, Will Bro Profits.
Nice.
They have a really good family kind of atmosphere. It's just different. And so it's been great so far. So once I started that, I actually joined them 2 months before I gave birth to my second kid.
Okay.
So kind
Wow.
of like
All
some
right.
people look and be like, that's crazy timing. Like you're about to have another baby. But in my head, I said, oh, I got 2 whole months to try to do some education and get into the education. And then I got maternity leave. So I can use maternity leave to like go to my market and be out in whatever I need to do. So I looked at it as a time opportunity that I wouldn't have once I started working my W-2 again. So that basically, then I started, let's see, continue with the story. That was the end of 2019 when I joined Jake and Gino, like the fall of 2019.
Okay.
And then I started like the end of December, January. I had picked a market. I drove out to the market a few times. I went on property tours. I met realtors. I went to some meetups in the area just to meet like other investors there, really trying to dig in and like establish a presence so people, could see me around. And then COVID hit. And so like all that work was kind of like halted and I just didn't really know what to do. And so like everything started turning virtual. There was a lot of virtual meetups and Zooms. So I started just doing those. And then just being part of Jake and Gino, I was going to a lot of Jake and Gino related events or Zoom events. And my accountability coach had actually started a mastermind group. And so I was like, you know what? That's what I need. I need that extra layer of like constant communication and just seeing, like, I don't have a partner that I'm working with on a day-to-day basis, but if I can hear and talk to people who are just like what they're doing day to day and just like have that energy kind of flowing through me, and that just constant talking to people that's like on a regular basis. So I joined that mastermind, and then from there things kind of have just taken off. So I've been on a lot of phone calls with people in the group, just introducing myself and networking. It's kind of like a forced networking. I don't think of myself as a good networker, or I didn't used to think of myself as a good networker, because I'd go to like meetups and events and just like stand in the corner. I don't know anybody, you look, you see like a circle of people over there talking, and you kind of like shimmy over like, what are you guys talking about? Oh, I'm just going to join the circle. And I just sit and and then that's how like you get that introduction, or I just wait for somebody to come up to me. So that's kind of how it would go at networking events. And but now I've been like forced to network so much and being on so many calls. So basically I'd be on a phone call and they say, oh, you got to talk to so-and-so. Then I get on that phone call. Oh, you got to talk to so-and-so. So it kind of got bounced around phone call to phone call. And then finally I talked to somebody who said, oh, I know somebody who's investing in your market. You should talk to him. He's a great guy. I've invested with him before and blah, blah, blah. So, okay. So I talked to him, and then we basically talked a few times. We hit it off well. And what ended up happening was a property got listed, and I saw it was listed on the MLS, and I saw it, and I said, oh, okay, that looks like a good deal that I should probably analyze just for some practice, right? The next day, my partner calls me and says, oh, my property manager sent me this deal, and she thinks it's a really good one that I should do because it's going to be great to manage. It has a lot of upside potential. Do you want to do it with me? And that's kind of how that happened. So we looked at it. We said we knew we had to act quick because our market is, starting to get a little bit more notoriety. And so we said we just need to go in with our offer. If we find something that's super crazy, we can always pull out. But at least like we can just go in strong. And so that's what we did. We put in an offer, and we found out 2 days later that our offer was accepted. And then the ball's been rolling from then.
Nice. So you said a lot there. I got a couple questions. One on the mastermind group. So you said it was accountability kind of partner or partners or partner group, kind of forced networking. Tell me a little bit more about the mastermind group and what drew you to this specific one.
It's called the Make It Happen Mastermind,
Okay.
MIH. And it's actually because my accountability coach with Jake and Gino, his name is Marco. And
Okay.
he is Marco and Hadar, two of the guys who formed the mastermind. So that's how I found out about it. Just like going to a lot of networking events, and he would mention it, and then I'm like, I need to be in the mastermind group because I need to just I don't have some people like that I'm talking to on a regular basis. Because basically, once you join Jake and Gino, it's really up to you to go out there and network with people and start meeting people, even if it's virtually, and be on those phone calls. And that I still at that point felt I wasn't good at networking, and that was something that was out of my comfort zone. So I didn't really take full advantage like I should have right out the gate with like getting into, the community more and posting on in the private Facebook group and just like getting to know people that way. So the
Okay.
mastermind is what kind of forced that on me. And so like I can see in just like a short amount of time, I've completely changed around. Like they made me start posting on social media because they said, you need to tell everybody what you're doing. You need to be posting on social media. That's what you need to be doing. You need to be doing it. I said, okay, all right, I'm gonna start doing it. So I started, and since then, like the summertime has just been me posting about real estate that I never, even though I was working on real estate all this time, I never posted about it. So I don't know, what other kind of limiting beliefs I had about posting because I only have a 3 family, or I only did this, or like I don't have enough experience for someone to, need to talk to me. Like why do they want to hear what I have to say? Like nobody cares. You know what I mean? Like, you haven't reached that level of success yet to like really influence anybody's life kind of thing. But
But
then,
see,
yeah.
yeah, you have because yeah, I invite you on the show because the criteria is somewhat specific that I only want to bring people on the show who have firsthand experience they can share with others, so they can get it right from the person who's out here in the business doing it, whatever facet it is. It's only been investors on the show so far. We'll have to talk more because you said you did a limited partnership, a syndication. So I want to learn more about that, but we'll talk about that in a future show. But yeah, you bring a lot of knowledge, and yeah, again, thanks for joining the show. And I know the listeners will appreciate the knowledge you have so far already. Now, and even the units, like you said, I only have a 3 family, but that is, at least, at that point, you've got more now. But even that is not a true measured number because if you think about the dollars, like you said, that's in the Bronx, New York, and that was $535,000, at least was what he was asking. So, I mean, in the Midwest, $535,000 can buy you, maybe a whole lot more. But
A
the
whole
units,
apartment building. That's why I'm just like, come on, man. I
yeah,
don't think I
exactly.
get
So,
that.
yeah, so the units are not a good, accurate, number or accurate depiction of, success, obviously, at all, or where you are in your journey, because,
Yeah.
the number dollar wise, it's just, it's a drastic difference. All right, so that investment, let's get into that. So, where's it at?
That is in Allentown, Pennsylvania.
Allentown, okay. And how far is that from you?
Like a 2-hour drive.
Okay, okay, so you went outside your neighborhood for sure. Why?
One, because like we talked about, New York is too expensive and too tenant friendly,
Mm-hmm.
and just like the rules and regulations is just too much. Taxes high. Also, New Jersey is pretty tenant friendly too, and their taxes are high, and they're not as really business friendly. So like plus you're also looking at other um, like demographic information and basically like what's going on business wise in the area. So there's all these other metrics to look at when you're analyzing a market. And that one also, Pennsylvania is a little bit more like their rules are, now you're getting to like, okay, now there's actual like landlords have a fair shot here,
Okay.
so yeah, that's basically it. And I also, another thing, like I feel like everything that's been happening to and for me has been because of networking. So get out there and get out of your shell and just do it. Like I learned about the market specifically from a mentor who I had went to a multifamily real estate investing like day conference in
Mm-hmm.
New Jersey, and he was there, and he also was somebody who was speaking at a conference for Jake and Gino the following month, and I had just joined Jake and Gino, so I saw his face on both places, and I was like, oh, he must know, like, because I was struggling trying to find a market, because I'm nothing in the Northeast is like a good market as far as like what people really look for when you're talking to other investors, and like the high growth and all this other stuff. And but I saw, oh, he's from up here, and he knows about multifamily, so he should know, or at least be able to give me an idea of some places to look. And so he did suggest, like, a certain area to me, and then I dug deeper. I didn't just take his word for it. I actually did some research of my own, pulled up information, and I said, you know what, that actually does look pretty good. I can at least start there and start digging in and see how it goes. And that's, how I ended up over there.
Okay, awesome, awesome. So it's a couple hours away, so that's not too bad, but it's not across the hallway like it was in the
Yeah,
first
and
one.
I think I'm not a big driver, so 2 hours is like my max. So it was
Okay.
like because I can't go no further than this.
Right,
I
right,
need to get
right.
out the car, stretch my legs. Like that's the longest I could drive in one shot.
Okay. So how much did it cost?
Um, 360,000.
Okay. Wow, big difference. So, and we're talking about units, but how many units is it?
Six units.
Okay, so for somewhat half the price, you got double
Got double the
the double
units.
the units. Okay, check that out. All right, and so is it buy and hold, fix and flip? It's obviously not wholesaling because you still have it, but
It's fix and hold. So a mix of fix and flips and buy and hold, fix and hold, I'll say, because
all right.
is a value add. It's very it's highly under rented. But the units do need some renovation. So even in as is condition is already under rented. So then once we actually go in and turn the units, then we can raise rents there even more. And then the goal is to refinance in like a year and a half or so and pull back out our initial equity. And then I can use that to buy another building.
So how will the rent increase affect the value, or does it?
Yeah. With commercial real estate, the value is based off of the net operating income. So if you can increase the rent, then you're increasing the rent, but you're not increasing the expenses. So your NOI at the bottom is going to increase, and then you get a valuation on the building based off of that. Normally, something with the cap rates, and then you'll divide it with the NOI.
Ah.
So there is I think after, from what we have estimated, after we get the building fully renovated and repositioned, there should be maybe a like 200,000 of equity in the
Wow,
building.
that is amazing. So that's one of those things that, in terms of wealth, what are the wealthy doing? That's something that's not talked about on the evening news.
Yeah, no, it's definitely not. Like the most real estate is invest in a REIT,
Yeah,
or
that's the
you know,
only real estate investment there is. Yep. Yeah. Or flipping, like you see on HGTV
yes,
and other
on
places.
HGTV. Yeah.
Okay, awesome. So $200,000 in equity. So what would be your plans for that?
Well, we'll pull some out. Like some of that will have to go back to rehab costs,
Okay.
because we'll have to pay back, whatever the rehab. But then for the down payment amount, because they're not going to let you refi all of that. You have to refi like 80%,
Mm-hmm.
75% LTV. So we won't be able to pull out the full amount. But my main thing is still just looking for deal flow and trying to get that next bigger deal. And I'm actually trying to work on getting a bigger deal now. Like I don't want to wait a year and a half before I can get into a next deal, and you don't have to. And so that's just something that I've been learning more, being in Jake and Gino, being in the mastermind, and just networking with so many other people, especially on LinkedIn. I've met up with a lot of other like real estate and multifamily investors, and there are other strategies for you to implement to be able to get into a multifamily deal without, like, I don't have to have the capital to bring to it. So there's just other ways. But so basically trying to, because right now across the country, the market for multifamilies is pretty tight. Prices are high. People are bidding stuff up, like, because money is looking for a place to go, and
Mm-hmm.
they're looking at multifamily because it's been like pretty stable throughout like the pandemic and everything. Um, so yeah, so basically trying to find deal flow, which I'm doing through, I'm going to start a direct mail campaign soon, because even in my area, it's just getting so competitive. And all the deals that you see are like 100 or more per door. And I don't know if your listeners know, but that's pretty high. I mean, some markets will demand that because that's just like a higher cost of living. But in comparison, the deal we bought was like 60 a door.
Hmm.
So, and all these other ones are, and that's where you get most value if you can be in that 60 to 70 a door, at least in my market. And so a lot of things I see like 100 to 125 a door that they're listing for. So in order to even find something that's worth doing, I'm going to have to go like directly to seller and try to negotiate with them there. And then there's like getting other investors who are interested in being passive, but getting into real estate investments, just like how I was a LP in the other deal, and working with a JV with some of the partners that I know from like my mastermind and from Jake and Gino. We could go in together on it and then bring other friends and family who want to who invest, but maybe don't know about opportunities or don't have those opportunities around them.
Okay, awesome. And that's what this show is about. So hopefully listeners, I'll ask you in a moment, how can they contact you? And maybe you'll find someone who does want to invest with you in that area or somewhere else. So $200,000 in equity already is amazing because you're going to get, so just for the listeners, so she's going to refinance, so she'll get a part of the dollar she put in back, and then she's still going to have the property, and then she'll have income from the property, but then money back to go put into another property. So yeah, again, not something that's on the evening on the evening news.
Yeah. You got to make the money work as hard as possible. I got to recycle it, keep recycling it.
Yes. Yep. 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 Now, in comparison to the stock market, where it's difficult to do that because the money is there, and not saying that the stock market's bad, but just in comparison to what you do hear about your everyday investments, 401k, the money's there, and the only way you get it is to sell it. So you're not having to sell the property; you're just refinancing, getting some equity out, and moving on to the next thing, which you can't do typically in the equities market.
You're right, and that's the power of leverage because the banks are willing to loan on real estate because there's an asset there. Not to say that stocks aren't an asset, but the bank's not going to lend on your stocks, like and let you pull out and hold your stocks, but then give you a loan against your stocks so that you can now go buy more stocks.
Right.
Not. I mean, if
Yeah.
you find that bank, let me know. But
Right.
yeah,
Because then, yeah. Right. Right. Yeah. So equity is something. So assets or real estate assets are something they trust because it's an asset there. So in the worst case scenario, if you do somehow don't hold up your end of the bargain and pay the mortgage, they can take the asset and now they can start over and sell it to somebody else. So it's something there, something tangible physically there. Again, like you said, not that stocks aren't, but it's kind of paper, a little bit. So,
yeah.
no, awesome, awesome. So just a couple more things, and then we'll close it. So I noticed that these couple of investments here, they're both multifamily, 3 units, 6 units. Why multifamily?
Um, I've looked into a lot of other types of asset classes, um, even mobile home parks, which is almost equivalent to multifamily, and that's
Hmm.
still a good one actually. Storage facilities I've looked into, and that's actually still a good one. But as far as residential living with tenants, I think having multiple units is better than just one. Like, why start with a single family? Firstly, even if it's the renter, and there's people who love single family and it works for them, but to me it's like it's the economies of scale. It's having like that hedge against one tenant not paying rent and then you have other tenants picking up the slack. So there, like, that part of multifamily, and that there's also a big demographic shift happening. I don't know if you guys have heard about the silver tsunami that's coming, It's basically all the baby boomers who are retiring, and a lot will be downsizing from these big houses that they don't need anymore, or they
Mm.
don't want to upkeep or maintain anymore. Like maybe their kids are gone, they're empty nesters, they don't need that much space. So a lot of times, if they don't want to go to a retirement community because they just are still feel like they're moving around and vibrant, then they go to an apartment building because then they don't have that ownership headache that comes with, owning a house. It's just easier, and they're retired. They don't want to deal with that. And then like a lot of like is it Gen X or millennials? I'm a millennial. Technically, I don't like that term. So I'm,
No, I
I'm
know
the
what you're
older
talking
head of
about.
millennials,
They,
so I'm not really okay. I
they've
won't
got a
say that.
different thought
But
on
yes,
home
it's different
ownership.
thought process. Yes, but now, yes, kids now don't really care about owning a house. It's not the American dream that it used to be. Like they want um flexibility and freedom. So a lot of younger people now don't see themselves being at a job for 40 or 50 years.
Hmm.
So they want the freedom of being entrepreneurs or working from home, working mobilely, digital stuff, and they want to be able to move around with that. So if they have a apartment that they're just renting, they can decide, oh, I don't really like it here, I'm going to move across country when my lease breaks, and then they could just float around and do what they want to do. And that's kind of where the shift in mindset is, from like the younger people wanting freedom and the older people wanting to downsize and not wanting that same responsibility, that there's such a demand for housing, and I think apartments is going to be right on the top of that list.
No, I agree with you completely. Yeah, it's there's a need for multifamily. You can see there's new skyrise, high rise apartment buildings going up everywhere, or mid rise. But yeah, the need is definitely there. So, have you considered anything outside of residential, such as industrial, office, retail? Nope.
I don't even have much to say about that. Like that is so far out of my wheelhouse. And even like if you just see with the pandemic now, like those things got murdered, like
Yes,
that
yes.
does definitely, even if I was thinking about it before, I'm not thinking about it now.
Right, right,
The
right, for
pandemic is
sure.
like really makes you, everybody always will need some place to stay, no matter if there's a pandemic or not. But like retail has already been dwindling before the pandemic, but the
Yep.
pandemic just expedited that. And so I don't know. And do I think things are going to open back up and be regular event again eventually? Yes, but that doesn't mean I want to put my investment time and dollars into those types of things. The only other thing I have been looking at though is laundromats. So
Okay.
I'm interested in laundromats. I have formed a little group, and we're starting to explore that and putting, one foot in front of the other, trying to get that started. But yeah, but also people need to clean clothes. So
Yep.
it's both things are like kind of pandemic resistant.
In the last show, yeah, I talked about, which will air, yeah, before this one. Yeah, just that it meets the need of people. People need a place to stay, whether it's a mortgage, so a single family home where someone lives, or they're leasing. Whether they lose their job or have a decrease in salary, they still need somewhere to live. So you're still meeting that need. You can't lose when you're hopefully you can't lose when you're providing a need that someone has,
Yeah,
that a lot of people have, like everybody.
yeah. Everybody.
Right. So I'm hoping that your family has been healthy during this unfortunate time in our history, such as COVID-19. What have you been doing during this time? So some people are forced to spend more time at home, obviously, because there's not as much to do outside safely. So what have you been doing during this time?
I'm still working. I work in a hospital, so I still have to go in.
Okay. Okay.
Yeah, so I think I was work from home for maybe a month,
Okay.
and they had it, even then it was like 2 days work from home, 2 days go into the office or go come into the
Uh,
hospital. So and then that only lasted for a couple weeks, so almost a month, and then we just started transitioning back to just being here all the time. Yeah.
okay. Okay. Investment wise, how has COVID-19 affected your investments, if any?
Actually, my I was gonna say nothing, but actually, my 3 unit One of my really good tenants I love, they paid on time all the time. Like the guy was very handy. He was very communicative with me. But
Hmm.
they had to move because they both, he was a taxi driver and she was a daycare worker. And so it was right at the beginning and they didn't know when things were going to start like opening back up again. And they weren't able to pay that 1 month's rent because, they had both lost their jobs. So they decided to move in with his mom who lived in in Florida. So basically, like I lost those tenants and had to get new tenants in, which it took a couple of months. So then that was like extra months of like lost income. Because right now I moved out of the three family, but we're renting an apartment until we can find our next multifamily to buy. And so I'm using cash flow from the three family to pay for our rent here, so that we still have subsidized rent. But when someone moves out, or I get a couple of months of no payment, then it gets tighter because then we have to actually
Yeah.
put up something. But yeah, so yeah, they moved down to Florida, and other than that, it hasn't really. It didn't take as long as I was afraid it would to get new tenants in. And then since then, I also had another set of tenants that had moved out and new tenants that moved in. So I've had a couple of turns already, but I don't think COVID has slowed it down too much from pre-COVID times.
Okay, that's good to hear. Yeah, we had a tenant who similarly was in a business where it needs the public, such as a restaurant, retail, etc. So yeah, we had kind of a similar situation that they decided to move with the family just because that was the main source of income, it seemed, and
Yeah,
unfortunate. But overall similar. We haven't seen a huge impact, thankfully.
yeah.
Again, multifamily is a good place to be, at least during this time for sure.
Mhm.
So, what are you doing different in your business that you weren't before?
Honestly, not much because I bought my 6 unit in COVID and I've only owned that for like a month or 2 months now. So the property manager, because we have property management for that building,
Hmm.
and so they're dealing with turning the units and trying to get some of the other things fixed in the building. Um, and then from there was actually only one unit vacant. And so they just been managing and doing what needs to be done, getting all the snow. The snow is crazy, getting all this shoveled and out the way. But then for the three family, because that's my experience like pre-COVID and post-COVID, there really hasn't been much. Like I still communicate when I need to go into the building or into a tenant's apartment to get something fixed. Like you still have to send people there, and so they just have to wear their masks, and that's basically it. The main thing is just wearing your mask and sanitizing all the time.
Nice, nice, nice. That's good to hear. Now, I asked what your goals were initially. We talked about main goal is to retire your mom, take care of family. How have your goals changed or expanded?
Okay. So, yes, it started with just my mom and getting her to retire. Now I've added, the generational wealth and legacy for my kids. And then also just like my lifestyle, I really want a freedom of lifestyle and be able to just go where we want, not be stuck. Me and my husband both to be financially free. And then the next level that I've actually added on pretty recently, because it's been forming slowly over the last couple years, but I really want to help other people who look like me get into real estate investments, especially bigger multifamily deals that we normally have not been privy to or allowed to get into. And that could also just be like an economical reason too, but there's also reasons why we're economically disadvantaged compared to other communities. So all of that, like now I feel like I've been blessed enough to have one foot in the door
Hmm.
of this multifamily area, and I'm building that network and connections with people who are like great people that I've met so far. But now I have access to deal flow. And the thing that people don't realize is that any multifamily deals that you see advertised are going to only be for accredited investors because that's the rules from the SEC. You
Okay.
can only advertise deals that are for accredited investors, which means you have to make 150 to $200,000
Yep.
individually, 300 for joint married, $1 million net worth without your primary residence, and so some other terms.
Consecutive years. Yep.
Exactly, exactly. So all these rules to be accredited. So if you don't know somebody, especially people of color, don't know someone who's doing it as an active operator, then how can you get into a deal? Because any of the deals, like you have to know somebody. You can get into a deal without being an accredited investor, but you have to be a sophisticated investor, which
Hmm.
at least means you need to have either you need to know how to analyze investments, or you need to have a financial advisor who can guide you on analyzing an investment. And so, as long as you have someone trustworthy like that who can look over your shoulder, then you can be considered a sophisticated investor. But you also have to know personally the operators of the deal. So that's where a lot of people get held up, is either they're not accredited, or even if they're sophisticated, they don't know someone who's doing it. So that's, I'm trying to just put it out there that, I have this foot in the door. I really want to help people be privy to these other kind of investments that are really great wealth generators and generational wealth, and it really can change the trajectory of your financial life, if you plan wisely and look over the long term for it. So that's my other why, is basically opening that door, kind of peeling back the curtain so that people can see how things operate and actually have access to investing in these opportunities that they normally wouldn't have had access to.
I like that. I like that. So this will be episode or show number 26, 27, depending on when it goes live. But
Hmm.
so for those that are listening, that's part of the goal of this show. So to bring people to opportunities or give them the knowledge. Like you said, you have to be at least a sophisticated investor if you're not um, an accredited investor. So how do you become sophisticated? Well, you have to learn about investing. So for the first probably 15 shows of this podcast, it's been about teaching those about investing. So one way is to educate yourself, and then the second way, which is required, is to know someone like yourself who can connect them with these opportunities. So how can we help? How can we help you? And I say we, meaning myself and the listeners, with your goals, get to where you're trying to get to.
Well, if you actually like are trying to think of alternative investments, or you're looking to build generational wealth, I love having phone calls and conversations with people and just giving them tips and suggestions based on their situation. Like I said, I'm not a good negotiator or salesy kind of person, so that's not even my MO. And I don't most conversations that I have, I'm telling people what like I honestly think. And of course it's still just my opinion, but I'm not trying to sell anybody into like investing with me, or I'm still looking for extra deals right now too. I have access, like I have my group of people, there's a lot of deal flow happening in that, so I could refer you to somebody else's deal if I think that that would be a good fit. But at the same time, like whatever, I can do, if I have information that will help you on your journey, feel free to like schedule a call with me or reach out to me on social media. My website is noirvestholdings.com. That's NOIRVEST holdings with the S.com. There's a contact us page, and you can schedule on my Calendly link to have a call with me, or you can message me through there. And then all the links to our social media profile and to my personal social media profiles are on the website as well. And you can just click that and get me on Facebook, Instagram, LinkedIn.
Awesome, awesome. So I'll put that in the show notes and probably try to get it on the screen too. Nicole, it's been a pleasure. We appreciate it.
Thank you so much for having me.
You're welcome. Thank you so much for joining us. Thank you.
Okay.
So I hope you enjoyed that in-depth real estate investing discussion with Nicole. I'm not going to hold you much longer. I took a whole lot of notes, but I'm just going to call attention to just a few points. Number one, yea-sayers. She was surrounded by people with a can-do attitude, letting her know that what she was working on, whatever she was doing in real estate investing, it was going to happen. Number two, her goals. Now, I'm not the judge of anyone's goals, nor should I be, but I think it's good to have a strong why in whatever you're doing, whether it's investing in real estate or something else. But I think her goals of retiring her mom, which is what her goals initially started out as, and how those goals grew into generational wealth for her kids and financial freedom for her family, and not just helping her own family, but helping others reach their goals with real estate investing. Number 3, she did not get discouraged. She had a make it happen attitude. She even said that it's about to happen. Why did she wholesale for so long with partners and she said they did not close an opportunity or close a wholesale deal? She had a notes investing or investing in non-performing notes opportunity, and a partner didn't hold up their end of the bargain on that, but she kept going because she had a it's about to happen attitude. And guess what? It did happen. So if you're struggling some part of your real estate investing journey or some part of whatever you're doing, just know that if you keep at it, it's about to happen. Now, if you're not doing anything at all, then nothing's about to happen. But if you want to talk with Nicole about making it happen, she said you can reach her at noirvestholdings.com. That's NOIRVEST holdings.com. So I hope you enjoyed this show. If you have questions about this show or any others, or if you have a question for me, I'm at neelyrealty.com/engage. That's NILEE realty.com/engage. As always, if you found this show helpful or beneficial, share it with someone else. Nicole shared it with you today, and you should share it with someone too. And I'll see them and you back here next time on the It's Attainable Real Estate Investing Show.
You have been listening to the It's Attainable Real Estate Investing Show, sharing transparent knowledge on investing and the powerful impact real estate investing can have on your wealth and lifestyle. Follow or subscribe to the show using your favorite podcast app so you'll know firsthand when a new show is released, or visit neelyrealty.com/podcast and see the show there. That's NILEE realty.com/podcast.